You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network. And if you're looking for some more interesting network content, well, then we have a great source for you. It is the recently launched and, dare I say, fantastic, fabulous, whatever adjective you want to throw in there, the Options Insider Radio Network mobile app, launched on your platform of choice last week. So that's iOS, that's Android, even you Amazon Kindle Fire lovers, we've got a version out there for you. Check your respective stores, of course, the Amazon App Store, the Google Play App Store, or the iOS App Store. Just search for Options Insider, our Options Insider Radio Network. If you want to type the whole thing, the app should pop up, and let us know what you guys think. It's a great way to stream all of our shows. You can, of course, download them for offline listening. You're on a plane, you're on a subway, that sort of thing. That's great as well. You can rate the stuff, and you can send us feedback. I know the iOS suite has a really elaborate feedback. You hit that contact button, you can tweet us, Facebook, email. I don't know if the Android and Amazon versions have that functionality yet, but they're working on it. It should be coming soon. Right now, I think if you hit connect in some of the individual shows, it gives you like a troubleshooting tab or something. But don't worry, if you're on Amazon or Android, we're coming with that functionality for you as well. Right now, the rest of the app works great. Go download it, kick the tires, and pretty soon you'll be able to send in your show questions via those apps as well. But you can definitely do it on iOS right now. So go check them out. The Options Insider Radio Network mobile app. Check it out in your app store of choice. All right, and joining us on the old Option Block All-Star panel today, you know them, you love them. We've assembled a rogues gallery from across the country for you today. Starting off closer to home this time, the man of many clocks and also many hats and indeed many phones. So if you hear some fun noises in the background, you know who's talking. It's none other than the Viceroy himself, good old Alex Jacobson from Options Express. Mr. Jacobson, welcome back to the program, sir.
Yeah, it's always a symphony in my house. Good to be here today, Mark. Real quiet day in the market. Everybody's waiting for Yellen tomorrow, but kudos to you for the Friday interview with George Ruhana. I hate to admit I'm that much of a junkie, but probably the best 50 minutes I spent this weekend. Real insight into the evolution of the industry and the challenges, and when I say a terrific 50 minutes to spend listening, I know I sound like a total geek, but a great interview for the Insider Network.
Thank you. That was a fun one. And that's, of course, you're referring to our Options Insider radio show, the titular show that got the whole ball rolling. That is indeed our Charlie Rose-style interview show where they sit down with different personalities and thought leaders and movers and shakers from throughout the world of options. Could be exchange heads, brokerage firm heads, trading firms, in this case, a brokerage firm. We do a lot of fun stuff like that. If you haven't checked it out, it is available, of course, in the main network feed. You can get all the shows there. Of course, you can also find it in the Options Insider radio feed as well. Of course, you can find it in that mobile app. I was just talking about that. And thank you for those kind words, Alex. You're the kind of guy we make that show for, the hardcore wonk who wants to know more. We got the content for you, sir. So I'm glad you enjoyed it. We have an audience of one for that show. Hope you liked it. Nah, I'm just teasing. That show actually does surprisingly well for as hardcore and as fun as it is. If you'd like to learn more about the options biz, that's the place to go. Speaking of the options biz, this guy has nothing to do with it, but he's still on the show anyway. He's none other than the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
That's because you need a token person from the East Coast if you're going to do any show about securities.
Yes,
you at least
that's
have
true.
to have somebody from the East Coast.
I surrendered my East Coast card a long time ago. I've been out here in Chicago long enough that I no longer count as a nutmegger, so you're our token East Coaster.
I'm not. I am the token East Coaster. I have no voice left because I was doing East Coast-like things, cheering kids' hockey games on all weekend, and sad end to the season, but that's the way it goes.
All right, and joining us last but not least, beaming in from the scenic winter wonderland known as lovely St. Charles, Illinois, he is none other than Uncle Mike Tusaw from RCM Asset Management and RCM Wealth Advisors. Mr. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here. Exciting day today, even though nothing happened. And the only reason I say it's exciting is because every day is an exciting day.
That's why we like to have you on the show. You're such a diehard optimist, and you counteract my deeply rooted cynicism and Alex's, let's just say, ability to throw cold water on everything.
We are the straddle of hosts, I tell you.
Yes, that's one word for it, I suppose. All right, and with that lovely image in mind, listeners, we're going to keep on rolling right on into the trading block.
The trading block.
All right, everybody, you know what those bells mean. It's time for the trading block, the portion of the show where we break down the day's worth of action and activity. For those of you playing the home game, we are recording this on Monday, February 10th, so you know exactly what action we are referring to. And as Alex alluded to earlier, wasn't exactly the most active day, certainly not compared to some of the recent sessions we've been seeing over the past few weeks where the S&P has been swinging 1% or more on any given day. Today, most of the major indices closing in the green, but only up fractionally. S&P up about 0.25% or about 3 handles to about 1,800 even. The NASDAQ leading the charge up about 0.5% to 41.48, and the good old Dow essentially unched up about a tenth of a percentage point, or about nearly 8 handles to 15,800. So yeah, not a lot going on there. Of course, the flip side of that coin, everything rallying. VIX cash coming off a little bit. Mr. Andrew, we had some interesting conversation on volatility views. Of course, all of you listeners can find that show on the network. In fact, this week's episode came out just as we're recording this today, not that long ago, a few hours ago. So check it out, theoptionsinsider.com. But a lot of good talk on that episode about how VIX has just been, and vol in general, just been this kind of weird, crazy beast of late. It kind of disappointed to the upside. Everyone was loading up on near-term volatility-based products on the upside, calls and some futures in that case. We got a pop, certainly not what everyone was expecting, and then it turned right back down, seemed to maybe even overcorrect a little bit to the downside. What's your take on what we've been seeing over the last few sessions, and now that we're hovering here with the VIX cash at 50.25? Is this our home for the foreseeable future? You like this spot? Are you back on the tip of down towards single digits, or are you thinking Yellen and company and the debt ceiling are going to push us back up to 20?
That's all. Those are all good. There's like 10 questions.
There's like 10 questions. See, you can see why I've been doing this for a while. I wanted to overload you at the top of the show.
I would say VIX near term, tough to get it below 14% this week. Unless Yellen pulls something out of her right ear, left ear, I don't think we'll see much of a pop in volatility. We're not getting kind of that 1%, those kind of bigger moves, although we did rally kind of good. We rallied, sort of Thursday, Friday. Those are more vol crushing rallies, which, you expect the volatility to come in pretty hard. So, at this level, I think probably 14 near term for the week would be about as low as it can go unless people get real excited again. But, we're back. The SPX is back at 1,800 or just tried to touch it today. Didn't quite. I don't know if it even traded over that, but got close. And, there's no reaction to vol products today. VXX is up 8 cents. VIX cash is down 2 on a weekend markup by the end of the day. So I don't think anybody's expecting, well, at least they're not expecting Yellen to say anything that's going to make the market more volatile than it was on Friday. So, with volatility being I would say a forward guesstimate of movement, looks like volatility is probably here or slightly lower by the end of the day tomorrow. That's what it feels like.
Yeah, it seems like everyone's kind of playing the wait-and-see game. This is our first real glimpse of good old Miss Yellen there and what kind of tack she takes with the Fed. So a lot of people playing the wait-and-see game, keeping their powder dry ahead of that, giving us a little bit of vol still holding on in the old marketplace. That's the reason probably why we haven't sold off even more aggressively. You can also, of course, factor in what we saw last week where people really took a hammer to vol, perhaps a little bit overzealously given everything else that's been going on in the marketplace as well. So you can probably factor those two in, which is why we're kind of hovering here around the old 15 handle in the VIX cash. Mr. Alex, a lot for you to chew on today and coming up next couple of days. What's really been catching your eye over there at OX and what's been lighting up the old tape over there at OX since the last time you and I spoke here on this program?
We're all still trying to figure out what happened last week, where the market ended the week dramatically unchanged. And what the
dramatically
factors. Yeah, I mean, last week just I just don't get it. Down 300 at the beginning of the week, up 300 at the end of the week. There's the Cavalier, of course, barking in the background. Couldn't have been timed worse. Just trying to fathom stuff. I mean, Yellen tomorrow is everything, and they're going to pre-release her remarks. I guess they're embargoed until 8:30. It will be interesting to look at what goes on in the morning in the debt markets, in the international markets. Although we had no volatility, once again being the geek, the German and Japanese 10-year were dramatically volatile today. The Japanese 10-year had a realized vol of almost 40 today. So there is stuff going on. It's clear that people are fairly confident in Yellen not doing anything that will spook the market tomorrow. And I think if there are no surprises out of her tomorrow, we may very well see vol dip back into the 12 zone by the end of this week. One thing to remember if you are trading this week, it is a long weekend next weekend. We're going into a 3-day weekend. So clearly you'll see some extra vol pumped in near the end of the week. But today was quiet. Other than international, today was quiet. Couple names obviously popped, and we'll talk a little bit about those in the Xpress Block. But everybody waiting on Yellen.
Uncle Mike Tusaw, I know a lot of action in one of your names this week, a lot of talk anyway about good old fruit company, a.k.a. Apple. I know I used to tease you about your 460 put. You since have rolled that up. But it seems like, and maybe I'll get your take on this as well, though, it seems like the company itself may have drawn a line somewhere around that 500 strike because they came out with a big buyback this past week. That's, of course, on the heels of what Icahn and everyone else has been bugging them about for ages. They didn't really go the full Icahn route, but they certainly did agree to buy back quite a chunk of change over there around that 5 handle. So what's your take here on this big buyback over there at Apple, and does that impact your strategy at all going forward?
No, that doesn't too much, but just some thoughts on the buyback itself. I think this could spark a rally in Apple, and with the pullback that we had after earnings, I like Apple right now just as a buying opportunity in general. There's a lot of reasons to believe Apple's going to go up at this point, in my opinion. And, of course, you keep it hedged and take your profits on the puts when you have the pullbacks like we've been doing for, it seems like my whole career now, it seems. But I That's not going to have too much of an impact on my strategy personally, but I do think it's going to be a good thing for the stock. I think it's going to continue to have some upward momentum, and I like Apple at these levels.
You know, it's funny. When I first saw that story about the Apple buyback coming out, I think it was last week, and I had flashbacks to my old days out in the IBM pit. I started out there on the SIBO. And, you know, I'd always talk to the stock guys throughout the day because you're hedging with a lot of stocks, so they were very active, and you were slinging underlying orders all day long to hedge your options trades. And it was always a big event whenever the firm would come in. It was always, you know, go through the pit. Hey, the firm's on the bid. The firm's on the bid. And IBM at the time had a very active stock buyback program. And so you knew whenever you heard that coming in that the firm was on the bid, at least for that session and for the next few sessions, there was going to be some support there. And they had drawn that line in the sand, and you could kind of rely on that for the rest of your session. Obviously, I haven't been that active out in Apple to see how often they're out there gobbling up stock, but this is a big announced, at least, buyback. So I wonder if that'll have similar repercussions. And you're right, maybe that is the turning point they needed to say this far, no farther, and 500 is perhaps the bounce point.
You have the Bernanke put on the market itself. Maybe you can call it the Icahn put on Apple.
Yeah, he certainly didn't get all that he wanted, but he certainly got him to spend some of that ridiculous hoard of cash that they're sitting on.
Yeah,
I know a lot of that goes back to Jobs and his personality and how he kind of got forced out the first time, and they had to go hat in hand to Microsoft. So I think a lot of that stems from him not wanting that insecurity anymore. So he wanted to just hoard cash, but I don't know why they're still doing it. He's gone. There's really no reason to be sitting on this mountain of money the way they are, unless you have some really legit use cases for it. So I'm glad to see that they're spending some of that, and if some of that's going to you, Uncle Mike, and your clients, so much the better.
Why, thank you.
There were some other interesting stories going on in the world of options over this past few sessions. Since we talked last, SIBO reported their earnings and the market gobbling them up. Like in the fact that they reported, I think they quoted the best fourth quarter in their history, quote unquote. Not surprising given the fact that VIX is lighting up the tape like crazy. So the VIX futures and the VIX options setting new ADV records almost daily given these past few sessions. So not surprising that was, of course, the case going into the end of Q4 as well. So not surprising, SIBO looking good. Of course, they didn't really they didn't outperform their at-the-money straddle. I think it was about $3, maybe $2.80, and they're up about $2 post-earnings. So not liking it, but the market seemed to be fairly priced in there out there in SIBO land. And SIBO in general has been interesting to watch. Getting a little bit more active. Still not exactly lighting up the tape from a volume perspective. Only about 2,500 contracts a day. That's getting into almost odd block territory. You're talking numbers like that. Speaking of exchanges, we also are still hearing, we hear rumors all the time, but this is more concrete stuff. BATS is actually talking about launching yet another options exchange. So those playing the home game, I believe that makes 13. And that would be BATS' second options exchange. They have BATS options now, an exchange that currently doesn't really do a whole heck of a lot of volume. And now they're going to launch another one. So at least not anytime soon. They have to get their merger finalized. But after that, they're talking about a new exchange. So there you go. If you think things are too crazy now and it's too complex and there's too many orders and issues that are causing all kinds of technical snafus all over the place, wait till there's yet another exchange on the horizon. And Andrew, this one's for you. This was interesting. Listeners, last episode we had a listener writing in with some questions on Bitcoin and the potential for Bitcoin derivatives, and we were all kind of joking, hey, what would that call skew look like in Bitcoin if there were calls on it? Well, the put skew is where we should have been looking. Bitcoin just taking it on the chin. Since our last episode, there was, of course, there's been the high-profile stories over the past few weeks about people getting arrested and that sort of stuff, but also more recently, I think since the last time we recorded, there was an exchange, I believe it was out of Mexico or Hong Kong or somewhere out of there, that stopped allowing people to actually withdraw their Bitcoins and cash them in. And that, of course, started a panic. And the price of Bitcoin has been taking on the chin. It's down from about over $900 at one point. I think it's somewhere around $618 as of today. So I guess the put skew is where we should have been looking, Andrew.
Yeah, the put skew, but we have mentioned tulips, tulip bulbs, things like that. I mean, when I hear about all of a sudden Mt. Gox shuts down because they can't, they can't pay people back, I would think that was probably kind of how the tulip bulb crisis started. All of a sudden, some guy had a bunch of tulips, but somebody actually wanted some guilders, and everybody started to freak out. So, I think there's going to be something probably to this virtual currency stuff down the road. Maybe it ends up becoming a global currency in our lifetime. Who knows? Who knows what can happen? But usually the innovators, the early ones, tend to the road gets paved with them once the feds decide that they really don't like what's going on, and there could be some regulatory action and things like that. So, if you're looking to get rich on Bitcoin, I wish you luck.
Yes, the road usually gets paved with their corpses and products like that. I think since the last time we talked, I think there was some high legal official over there in Russia came out and said Bitcoin and all other cryptocurrencies are illegal here and stuff. So it certainly hasn't been a good series of headlines. Alex, you can imagine the margin calls and the risks department handling something like that. All the premium sellers you guys have over at OX blasting out aggressive puts on Bitcoin, and then the thing gets chopped roughly in a third. It would make for a fun week for the risk department over there at OX. I'll be glad you guys aren't listening to this one right now, I'd imagine.
Yeah. Plus, I think it trades, in theory, 24 hours a day, 7 days a week. So there would be a lot of gray hair in the risk department.
I have a thought on Bitcoin. My sophomore year of college, my head coach got fired for punching a kid in the stomach on the sidelines. And it actually made national news, and it was obviously bad publicity for the school. However, one thing that it did is it taught me a lesson that there might not necessarily be as bad of a such thing as bad publicity. And that got us at small Division II school in the middle of nowhere a lot of publicity. And we had a phenomenal recruiting class next year because everyone had heard of us. There was all of a sudden a new coach came in. It brought a lot of excitement to the program. Now, I have no money invested in Bitcoin, nor do I intend to by any means. But one thing that this could be is one of those things to where, like you said, Mark, this could be the Wild West days along the lines of it's just another thing that it's just a small blip on the screen, but it's still adding publicity to Bitcoin because of this news, more people have heard of Bitcoin today than they did a week ago because of this news. That is my thought.
Yeah, you look at a lot of sites, CNN Money and others, they're all adding Bitcoin dedicated sections now. So it's certainly getting out there. I guess you subscribe to the no news is bad news or no PR is bad PR type of mentality. I suppose there's some resonance to that. But for now, I think we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what we're talking about here. This is, of course, the Odd Block, the portion of the show where we highlight the interesting and or the unusual options activity that's lighting up the old tape. Speaking of interesting activity, Andrew, I was working some stuff most of the day, and I was getting ready to do the show, and so I didn't have time to really work them anymore. So I was working these calls, and I was on the offer most of the day. Not much trade, and so finally I said, the hell with it. I'm just going to get them done so I can move on, get this show ready, and I blast them out, hit the bid, take out the whole bid. So I was happy about it because the bid was gone. I go start right out the show. I come back a little bit later, time to do the show, right before showtime, and I see that not only are my calls bid out, even though the underlying hasn't moved, but someone came in after me and lifted the offer on a bunch more. And I was like, where the hell were you all day? So that's the price I quite literally pay for you listeners here on this show. You make me sell my stuff perhaps before I wanted to. That's my moral of the story for today. Even we are here on the Odd Block and the Option Block get bad fills on occasion. All right, Senior Andrew, I think we shall start. What about in the one we've talked about on the show, and it has been a little while, I think, but this is kind of an Odd Block regular. This is EFA, the iShares MSCI EAFE Index Fund. This is an ETF, obviously, a name that does actually has been averaging about 58,000 contracts a day of late. Of course, some of that inflated given the recent activity we've seen in the emerging markets land. Today, doing less than that, doing about half of that, actually, doing about 28,000 contracts. So it wasn't so much the size of what we saw going on today, at least from an overall volume perspective. It was one individual trade that really caught our attention out here, and that was actually fairly sizable. It was the June 36 puts. We saw someone coming in, granted this is EFA closing today at $65 roughly, $64.90. Someone coming in today and just gobbling up a ton, 10,000 to be precise, in one block of the June 36 puts. So yes, you heard me right, that's nearly 20 handles out of the money here, listeners, on a $65 stock. He paid a whopping 4 cents for these guys. There is zero open interest on the strike. Not surprising because they're so far out of the money. So this is all opening paper. It went up on one big block, lifting the offer. So clearly this is somebody looking for some very, very long-term, not long-term, but very, very out-of-the-money type protection. The stock has to drop over 20% for this thing to really start paying off. Of interest, though, there is some size open interest down around here. On that 35 strike, there are 50,000 of those puts open. So this could be our friend here perhaps adding to that position on a little bit strike higher, taking advantage of the fact that those puts are all pretty much worthless anyway. What's your take here, Senior Lobster?
So this is, by the way, the EFA, for these things to be at the money, we have to go down 29 handles. So it's a long way down.
Oh, yes, I said 20. I meant 30. Yeah, you're right. They're 30 handles out of the money.
I mean, I was being 20% down would probably get the volatility, get things up to about 10 or 11 cents or something like that. It feels to me like a risk control type of trade where somebody somewhere sold something for much better prices and just has to kind of clean up their sheets somehow. So, they buy something like this, so they turn whatever they sold. Maybe they sold the 50s for a lot of money, and at least they have some sort of margin control. So that's what the trade feels like. I could be totally wrong, of course, but why you would buy these puts, only usually, at least when I used to buy puts like this in any kind of size, is because I sold more of them for better prices somewhere else.
Yeah, maybe it's that guy who blasted out 50,000 of the 35 puts. Maybe his risk manager came in and said, yeah, your tail risk ain't looking too good today. So he takes some of that off, and so he said, hey, I can get the 36s for the same price, and I can get at least a fifth of them off and make them happy.
Exactly. I mean, he probably now is that makes a little more sense because maybe 2 weeks ago, these things had some value when the volatility kicked up a little bit. So it makes sense to take it off that way and just try to let the rest sort of die. So, but an interesting trade nonetheless. And another thing with emerging markets, we're not getting the follow through. And I'm sure Alex will touch on it, but we're not getting the yucky emerging market follow through. Doesn't mean it can't happen, but it's been kind of as a story. Argentina. Now you got two hedge funds fighting it out. Not hear much more on Turkey. So, I mean, tomorrow, we could always have more news, but at least as for today, what happens to him when Yellen decides maybe to hit the exits or saying, well, taper, we're going to keep it up. And, you might see a little more selling there, but I would be surprised if the market is expecting the Fed to stop buying bonds or to slow down their to basically reduce the taper. It feels like it's kind of set at this point, but I could be wrong.
No way, sir. You cannot be wrong. I refuse to allow it. Not here on the Odd Block. Keeping on rolling here. Another name, we've talked about this one in the past. It has been quite a while for this one, I believe, too. This is ConAgra Foods, Inc., ticker symbol CAG, C-A-G, closing at about 31 even, up about 0.7%, or about 20-odd cents today. And this is keeping the narrative rolling here again. It's put buying day in the Odd Block, and someone was loading up on some CAG Feb 30 puts, to be precise. This is the name that does about 2,000 contracts a day, doing 10x that, about 21,000 contracts today. When we wrote this up this morning, it was about 6,500 of these Feb 30 puts being lifted on the offer for about 20 cents. They since have pretty much doubled that since we wrote that up, so it's about 13,000 of these went up total on the day on open interest of just 120 contracts. So it's all open in paper, and they went out, 15-cent bid for some more. So someone looking to gobble up some puts here. Senior Andrew, what's your take here on all this downside love here in ConAgra?
I mean, it's a pretty aggressive put buy for a low volatility stock. So, and besides the print, a lot of scattered put buying. So I thought this could be somehow related to the run up we had in like the DBA and some of the other like commodity. I'm just talking about commodity ETFs, but obviously all the little jump in commodities kind of underpin that. So it was a very strange purchase, because it's aggressive. I mean, this ConAgra kind of has to fall out of bed. I didn't see any earnings coming out. So, I'm not quite sure what the rationale is, but I mean, it made the volatility jump pretty high. So maybe somebody is expecting that nobody wants to buy Chef Boyardee anymore. I was looking at all the food. I'm like, Banquet, Chef Boyardee, Egg Beaters, healthy. The only thing I like in the whole thing is Hebrew National. Oh, and Slim Jim, beef jerky. But other than that, I'm not too much of a fan of anything else. But not that matters too much.
All right, rolling on in quite literally to the next one. We got a call roll going up here in an odd block special, a sub $5 name. This is AuRico Gold Inc., ticker symbol AUQ. Closing today, $4.93, up about 20 cents or about 4% on the day. So the name that does a whopping 400 contracts a day, doing about nearly 10,000, 9,000 plus contracts here on the day. A good chunk of those coming out here in SEP land, where we saw the SEP 6 calls going up about 6,000 total times. When we wrote it up, it was 3,000. It since has doubled to 6,000 for about 30 cents. We also saw a bunch of the June 5s going up. Of course, there's no open interest on the SEP 6s at all, 62 contracts, so that's all open in paper. We also saw about 2,500 the June 5s going up for a variety of prices, and that has about 3,700 contracts going up on that strike. So this seems like the standard old up and out here, taking off the 5 strike, rolling a little farther out, a little farther up to the 6s. Senior Lobster, is that your take as well?
Yeah, it looked like call rolling. I'm seeing a lot more activity in these gold miners lately, probably the last month. They're kind of dead, and seeing some more call buying, more call rolling. All it looks kind of a little bullish. I don't know if it's the bottom in the gold miners, the GDX is popping, but this is kind of along similar type paper where, people that might have written calls are looking for a little more, maybe so they're, rolling their calls up, or they're buying kind of at the money or just out of the money calls. So kind of consistent paper, thinking that the, gold miners are going to continue to sort of rebound from there. I believe they're kind of at, they're not very far off of 2-3 year lows, the way I look at it.
Yeah, and I should mention, too, that that's an up and out where they're buying to close the June 5s and then selling again the SEP 6s. So they're not buying to open on the SEP 6 strike. It's an overwriter rolling on out farther and upward, in case I wasn't clear on that earlier. All right, and wrapping things up here on the old odd block, we have Boardwalk Empire. They, of course, are a producer of fine rum and distilled products. No, this is Boardwalk Pipeline Partners, ticker symbol BWP, closing today $13, roughly even. Taking it on the chin, though, down $11 or about 46% here. They had earnings before the open. I'm going to go out on a limb and say the earnings not exactly that good. And what we saw, usually in a day like this, you see a name getting crushed like this. You see people using options to chase a bunch of deltas, buying puts, selling calls, that sort of thing to catch up with a stock that's in free fall. That seems to be the case over here as well. We saw a bunch of the SEP 12 halves going up earlier in the session. These are still in the money calls, even with all the crushing of the stock. These are still 50 cents in the money. Of course, they were substantially more in the money yesterday. They went up, when we wrote it up, it was about 900 went up for about $3. That was a good sale because these went out substantially less than that, about 220, and we saw nearly 12,000 total on the day going up on this strike after we wrote it up, or about 11,700 on zero open interest. So looks like someone, Mr. Andrew, maybe you concur as well, just looking to chase this thing down, selling some in the money calls to get some good short deltas on here.
Yeah, what's weird is because this is a midstream natural gas storage company, and they had to slash their dividend by a ton, like 80%, which I don't know how that bodes for the other midstream natural gas storage companies, but this is, I think, kind of significant in that market because nobody needed any storage over the last month. Essentially, everything that they were pulling out of the ground, they were piping directly to the end user. So I don't know if this is a short-term blip in that, that midstream industry or not, but feels kind of like a buying opportunity. And I thought this 12.5 call seller was kind of creating a buy right because the volatility was about 60, which I don't think it's been that high in 2 years. So, they clearly could have been selling those to manage Delta for sure. But I thought it smells like somebody smelling an opportunity here to scoop a stock like this up. But keeps going lower, so I could be wrong. But that's kind of what it felt like. It's, you sell a 12.5 call, maybe they just think the company's toast. I don't know.
Yeah, it's an aggressive sale for someone who could be, who wants to scoop up some stock and be bullish, But I can see your point. It might be hard to get those puts off, and they are attractive, pushing. Yeah, you're right about a 55 volatility on that strike right now. So it's an attractive way to go, I suppose, if you want to go that route. But this looks like, of course, if someone's chasing deltas, they might be doing a little bit nearer term as well. Maybe June as opposed to, or March as opposed to Sep. Why deal with all that premium if you don't have to? But it is juicy out there, so that could have attracted them.
Yep. So definitely a high vol, and I think there's some serious questions about what's going on. So does it look like kind of an interesting buy, right? Certainly paying more than the 10-cent dividend they're going to pay lately. They used to pay a 50-cent dividend, so that's a pretty giant cut for what's supposed to be a kind of sleepy business.
Yeah, the stock's already clipped, and you're picking up. A good chunk, 8 to 10% here, just on writing that put essentially for the next few months. So, but not longer than that till September. But interesting. I guess if you think this guy's gonna still be around, there are worse ways to play it. I'm gonna hope for his sake that there's no stock component here, and he's just blasting out, and this thing's going to zero. We shall see, sir, which side of the coin he falls upon.
See,
indeed. All right, but that's gonna do it right now. We'll have to play the wait-and-see game for this name here in the old odd block. But now we're going to keep on rolling right on into an even odder part of the show because it's time for the fancy hats. Yes, it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It's time for our exotic tour into the world of haberdashery and clocks and phones. None other than the Xpress Block with Mr. Alex Jacobson. Mr. Viceroy, what have you on the docket for us today, sir?
I'm taking the brunt of it today. That means the dog will start barking in a minute. Quiet day overall in the market. Obviously, two names that generated a lot of paper today, both Tesla and Apple. And we've already talked about Apple and Icahn sort of not going away, but not pressing the buyback. Tesla, interesting news today because this is a stock that amongst our customer base and on our OX social community site, every time the stock goes down, the site lights up with, I told you so, it's never going to happen. And, of course, today bouncing up around 200. I guess the first boatload of Teslas on their way to China stack up over $10 today. That was keeping the desk busy. And that's one where, because of the $200 price, we obviously see a lot more traction in the options than we do in the cash. The other thing that was kind of interesting today was oil taking out briefly the $100 level. And at OX, when oil takes out the $100 level, both the futures desk is busy, but the option desk picks up. And what it picks up in are the Bakers and the Schlumbergers and the Halliburtons. So we saw some traction there today. But overall, it other than Tesla and Apple, everybody's waiting for Janet Yellen tomorrow. And as I said, she'll be her remarks will be released, I think, at 8:30. I don't think she's actually on until 9. But everybody will be looking at Janet Yellen tomorrow, her first shot in front of the committee. And it's, macro. So if she's got nothing surprising to say, I think we continue to drift higher and we'll have a good market.
Yeah, we haven't checked back in on Tesla in a while here on the show, but it's been on the rampage over the last month and a half or so. We talked a lot about it getting its wings clipped a bit, hitting that 200 level, and coming right back down to about the 150 or so level. About mid-January or so, it seems like the 14th, they came out and reported that people were expecting them to ship 6,000 cars in the quarter from their thing. They actually shipped 6,900. So that 900 cars apparently was enough to spark the stock up about $15, and it hasn't really looked back from there. It's been pretty much straight up from about that mid-Jan date and hitting today, flirting with 200. Didn't hit it, 199.30. So flirting back with that 200 level. A great example of a company using PR, using Twitter to keep that stock price alive and afloat. But you're right. It is must. We'll have to play another guessing game on the show here one of these days, Alex, and get Tesla up there again to see what else people at OX are trading over there, because this has got to be a huge one for you guys. Hopefully, people aren't naked selling upside there in Tesla, because that's been a dangerous road to hoe over the past few months in particular. So hopefully those people have shaken out and they've moved on to something else, perhaps a little bit more risk mitigated out there. But Tesla is still an attractive one if you're out there looking for covered calls and things like that. Tesla, not exactly. You can do a lot worse. Let's just put it that way. Any of your clients floating around in Tesla these days again, Mr. Andrew, or are you guys kind of waiting and seeing on that one?
We're looking for a couple of, because earnings are coming out. We're looking for some interesting kind of pre-earnings short calendars. It's a good trade for people that have margin, seeing if there could be a trade in there. So there's some things we do in our pro and platinum level where kind of pre-earnings plays that we close them though prior to earnings that have they're kind of low probability. Well, let's say mid cost on let's say mid-chance in probability or high probability, because you've got a lot of volatility edge, but really low delta risk trades. That could turn into something. So let's call them low risk with potential high reward trades. That's what I was trying to squeak out. So yeah, we have looked at it, and it's all positions that will come off probably the day before earnings.
Of course, free juice. Going into earnings, sir. We like it. All right. Thank you, Mr. Alex, and indeed, Mr. Rock Lobster. But that is all the time we have for the Xpress Block. And now we're going to keep on rolling right on into the Strategy Block.
The Strategy Block.
All right, listeners, speaking of fine haberdashery, you've come to the right place, because this is, of course, the Strategy Block. This is the portion of the show where Uncle Mike comes on down from the mountain, smoking jacket and deerstalker cap in hand, to dispense some options, wit, and or wisdom. Uncle Mike, a lot of grist for the mill, a lot of things to chew on. So what in particular do you have in mind for today's block of strategery?
Well, today what I want to go through is gamma combined with the credit spread. And this is actually a preview into a webinar with which we're going to be doing with a Mr. Mark Sebastian on the 4th of March. I want to give you a little bit of a preview of, number one, what the webinar is going to be, and number two, why it's important. So let's take a look at this for a second. We've talked about this on the show before, the expiration day risk graph, and that is when XYZ stock is at 50, you sell the 45 put, you buy the 40 put, and it's mathematically impossible for you to lose money so long as the stock stays above 45. So naturally, what that then does is it gets people thinking, oh, okay, my stop loss point will be at 45, and then if I get out at 45, then I'll break even because it won't go in the money. Dead wrong, obviously. What I want to go through is how you can manage risk on such a position. Now, right now, with implied volatility lower than it was, well, let's say a week ago, a lot of people may have gotten into some credit spreads because of the fact that vol was a little bit higher. But what I want to go through today very briefly, which Mr. Sebastian will be talking about a little bit more at our webinar coming up in a few weeks, is ways with which to manage that type of risk. So let's say that we're doing that trade. XYZ stock is at 50 and you're in the 45-40 bull put spread. One thing that I would encourage you not to do is wait right until the stock goes down to $45 to make the roll. Reason being is that if you do that, let's say that the stock closes one day at $45.17. Well, you know what? I'm a little bit nervous, but I'm still above my stop loss, and I'm in good shape because of the fact that so long as the stock stays the same or goes up, then I'm going to make my full profit on this trade. After all, I have a 2 in 3 chance of winning. The stock's either going to go up, down, or stay the same, and if it stays the same or goes up, that's 2 out of the 3. I'm looking pretty good still, even though the stock's gone down. Good gosh, I love options. Not so fast. One thing that I've seen people get burned on, if it happens intraday when the stock goes to 45, a lot of times I've seen beginner traders, they're smart, and then they roll out of the option, they get out of the put spread they're in, they roll down to maybe a 44, a 43, or maybe go out to another month, or maybe just get out altogether, who knows. But where the real danger lies is when you're right above your stop point and you're complacent. So if you're at $45.17, where the danger lies, folks, is that if that stock goes down to 42 the next day, then all of a sudden you're in a world of hurt with that position. So a couple of ways with which you can manage risk on it. Mark will talk about this more in detail in his webinar, but perhaps when the stock goes down to 48, maybe that's when you start to roll it down a little bit from the 45s to the 44s. Take a little bit of a loss, but you'll get a little bit more breathing room. Or perhaps you close 2 of the 10 contracts, something along those lines. Goes down to 47, maybe you close 4 of the remaining 8 contracts. Something along those lines to where you're being proactive and, to quote a good friend of mine, doing stuff. So with that in mind, now that we have volatility lower, if you're still a degenerate credit spreader, if that's the case, that's fine. But make sure that you have a plan for in case they go against you, and don't wait till the last minute, folks. And that is one to grow on.
I don't know, Andrew, he called you a good friend of his, so do we need to edit that out, or are we good?
I wasn't referring to Andrew.
Oh, okay. Well, then there we go. I thought he might take umbrage to that, but okay.
I don't even know what to say. I got a compliment, then I got thrown under the bus, then I got thrown under the bus again.
Okay, I'm kidding. Right. I was talking about you.
I feel like the tire tracks. Somebody with a tractor from the middle of Illinois just drove over me.
I feel bad now.
It's kind of like marriage.
Can we kiss and make up, Andrew? Can we do an online cyber kiss and make up?
Oh, mother of God, I want all.
Wow, that's
mother.
That's let's just keep on rolling right on into. Thankfully, we only have 5 minutes left.
Well, where's my dog?
For the Around the Block segment.
Around the Block.
All right, welcome to the Around the Block segment. This is, of course, the portion of the program where we peer ahead into the markets and the world of options, as we all talked about here on the show. Miss Yellen coming on tomorrow. We'll see what she has to say. Of course, by the time you listen to this, you may have already heard what she has to say, so it should be interesting. Markets keeping their powder dry ahead of that, of course. Relatively decent-sized earnings coming out later this week. We have, of course, Don't Tell Uncle Mike, but Cisco reporting on the 12th after the close. That would be Wednesday. They're hovering around the 22, 23 handle now, so they've been faring well in this rally. We've got NVIDIA on the 12th after the close as well. They're, of course, the graphics cards manufacturer, trading about $16 or so right now. We also are starting to see those early rumblings, and maybe another reason why vol isn't exactly coming off so much right now anymore. The early rumblings about the debt ceiling again. We had the Treasury Secretary saying that we could start seeing some missing payments as early as February 27th, if that whole debate doesn't start back up again. So that could perhaps throw a wrench into the works in the coming sessions as well. But Senior Andrew, we shall start with you. What are you watching for the rest of this week, at least until we convene again on Thursday?
More Yellen, just how market reacts to that. If indeed she says we're staying the course. The emerging markets seem to hold up because the Fed's not going to help them. And if they actually can weather whatever that is, we might have a little bit more smooth sailing, but we could definitely have a bump in the road. And if we have a bump in the road in those markets, we'll probably have another bump in ours in the relatively short term.
And Senior Uncle Mike, what are you watching for the rest of this week, sir?
Well, like everyone else, we'll be watching the open tomorrow, seeing how things react with Yellen. Also looking to see if gold can continue its run. It's getting above some levels now, and I think we might be kind of one of those points right now where if it's still going to continue to be in a channel or it's going to break out. I think we're at some key levels with gold, and I think Yellen could be a key factor in what we're seeing tomorrow.
Mr. Jacobson, will you make it unanimous? Will you be yelling at Yellen tomorrow as well?
I will be trained to the TV watching what Yellen does in the morning. Also watching the macro indicators, our 10-year, the German 10-year, the Japanese 10-year. As I said earlier, surprising volatility. Number of biotech IPOs this week, and I've been a big fan of biotech, and they continue to lead. I think they will continue to be a hot group for this year. So looking at the biotech index as well, but it's all Yellen all the time tomorrow.
All right, and that is all the time we have for the program today. But before we go, let me check in with my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Mr. Rock Lobster. What's cooking in the land known as the Pit?
You'll be surprised today, but I actually know what's cooking.
Wow. Who are you, and what have you done with Andrew Giovinazzi?
I know it's a little freaky even for me. March 8th on a Saturday, we'll be doing our webinars. These ones aren't free, though, unless you're already an Option Pit member to some degree. The webinar will be selling puts in an ugly market. So basically, not just, kind of selling puts willy-nilly, but some of the smarter ways to sell puts. Mike does allude to them on the show from time to time, but there are smart ways to do it, and there are dopey ways to do it. And we're going to try to separate them because, some sectors have definitely gotten smashed pretty good. And that's usually one of my definitions for wanting to sell a put is for a stock that's already cheap. So I will go through that kind of methodology for investors. And the last webinar went very well. And, obviously hoping that this one will go well as well.
All right, sir. Thank you. May now go back to your hot skating.
Thank you. All right, guys.
All right. And Uncle Mike Tusaw, what is cooking in the land of the RCM webinar train?
This week, we're busting out the haberdashery, and we're doing a webinar on ratio spreads on Thursday night. We're excited about it. Stop on by. We will be going through a lot. RCMFS.com/webinars.
Too bad it's not a video podcast, so I can see all this fine haberdashery in person. That would be great.
Well, they always said I had a good face for radio, so I guess I have a good haberdashery for radio too.
All right. And speaking of fine haberdashery, we are also joined, last but certainly not least, by the Viceroy himself, a man of many fancy hats, as well as many other fancy things. Mr. Viceroy, what are you watching for the rest of this week, sir?
I'll just showcase a couple webinars. There is a full webinar schedule here at Options Express, and everything is free. All the events, all the education are free. Just come to optionsexpress.com. I'll just showcase, too, Wednesday the 12th, Nina's going to do the Commodity Channel Index indicators. And then Thursday, we're going to talk about IRA, KEO, 401ks, and collars, what you can do. I know there still exists a lot of confusion about what you can do in qualified accounts in terms of hedges. So if you have any of those questions, come into the webinar on the 13th, and Nina will educate you on what you can do in qualified retirement accounts.
Sounds good. I know that's always a very common question we receive on a lot of our programs here. Mr. Jacobson, so it will be interesting to have another OX webinar addressing that so we don't have to do all the heavy lifting. So thank Nina on our behalf. And while we're thanking people, I, of course, want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this program, and hopefully for downloading our app and checking it out. And if you check it out and have some questions or comments, let us know. We're always looking for tweaks and improvements and ways to make it even more user-friendly for you guys. And on behalf of Alex and Mike and the Rock Lobster and, of course, myself, we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.